Okay, I think we're live right now. I'm seeing the comments come through. So we'll be pulling, just so folks know, we'll be pulling the comments in throughout the conversation. So if you guys got questions, just keep asking them there, and I'll be monitoring that. And if we see something that's a great topic, we'll pull it in. And if you guys hear any audio issues or whatever, put that in the comments too, and we'll try to sort it out. But so let's start off with the monster day that we just had.
Unbelievable.
$1 trillion market cap. What are your thoughts?
Now look, we throw the T word around like it's nothing. It's not nothing.
It's not nothing.
A trillion, right? Preston, you and I have to sit here for the next 31,710 years and spend $1 a second. That's the trillion. Now, I'm sure everyone online now would like to do that. We'll just hang out here for 31,000 years. But no, seriously, why is this huge? Well, it's huge in so many ways. It's a milestone. It's not the end. In fact, we were just talking before we went live. We're so early, right?
Early.
This is just the beginning, and the first trillion's the hardest. But what I think it does is it validates the direction, right? Is Bitcoin as an asset has been on a path to kind of engulf other stores of value. We've all seen the charts, and the power law says we're eventually going to catch silver, then diamonds, then gold. And I've been talking about kind of Bitcoin gold equivalents for a long time. And the first time I talked about it, literally took shit for months. People saying, you're an idiot. How could you say $500,000? How could you say $1 million? Well, I'm not saying it tomorrow. What I'm saying is, as we approach this store of value equivalency to gold, that's what happens. And after that is real estate. But the big number, and this is the number I get most excited about. I did a presentation yesterday on network effects and the power of Metcalfe's law. And in there, I show that today, the Bitcoin network is roughly equivalent to the other FANGs, which are networks, right? They're not companies. Apple's not a company the way we think of old style companies. Amazon is not a company the way we think of old style companies. They're networks. And the way networks grow is parabolically. And so as we approach those networks, the next step is gold at 8 trillion. But then the real step, and this is where it gets mind-blowing, is M2. Global M2 is 86 trillion. And it doesn't mean we replace money, but we become an alternative to fiat, what I call the fiat fiasco, right? And I had this great chart in one of my presentations from a while back. It's an X. And for 5,000 years, gold has been money. And in 1973, that ended when we went off the gold standard. And now fiat is going down this side of the X. And crypto, which is only 12 years old, is going up the X. And eventually, there is a displacement, but it's a long way off. And so there's a heck of a ride. Now, the one thing I actually do hope for is the human brain can't handle big numbers. It's like most people don't want to buy Berkshire Hathaway stock because it's too much, but you can buy a fractional share and you can buy a fractional piece of Bitcoin. So I do hope, in fact, I changed my hashtag, my handle on Twitter to @Mark Yusko, hashtag 2.1 quadrillion, because there are 2.1 quadrillion Satoshis. And at some point, we should talk about Satoshis as a unit of value instead of Bitcoin.
Do you think that it is that far off, though? I mean, everything we're looking at right now is suggesting this is happening way faster than I think some folks are thinking.
Oh, for sure. And when I say far off, I don't mean 100 years, but I mean, it may take us 3 or 4 more years to catch gold. It may take another decade before it really is thought of as a reserve currency. And you notice I didn't say the reserve currency, because the reserve currency is more nuanced, right? You're anointed that. And interestingly, given your background, historically, it was all about military superiority and really naval superiority. And so whoever had the fastest ships and the best navy had the world reserve currency. So at first it was Portugal, interestingly enough, in the 1400s, because they had the tallest trees. And then Spain took them over. So then they had the tallest masts. And then France took them over, then the Netherlands. And then the British got the steamship. And so they had faster ships. And then we got nuclear. And so we've had naval superiority. But the interesting thing, China figured out probably 5-6 years ago, the next war is going to be fought with chips, not ships. So now it's all about digital superiority. And they lead the world in AI. They lead the world in 5G. I heard, and I haven't confirmed it yet, and I wish someone could confirm it for me, that during Lunar New Year, they hand out the red envelopes full of money. This year, supposedly, the government handed out some with QR codes with digital renminbi. And if that's true, and they have the digital renminbi, that will start to rival the dollar for world reserve currency status. And then quietly, Bitcoin can just come up and take a place as a reserve currency.
So I'm kind of the opinion that the central bank digital currencies are just going to accelerate everything as far as the hyper Bitcoinization. Because it's not like when you look at a central bank digital currency, they're not solving any of the fiscal issues that are there. So you completely agree with that.
Oh, complete. And all they do is complete the transition from analog to electronic to digital. Every part of our life is doing that, right? You're almost old enough, right? Not quite as old as me, to remember albums, record albums, right? Analog. Then we went to MP3s, electronic. But the problem with MP3s is you could copy them. And that was bad because the music industry wanted you to have your own original, me to have my own original. Well, now we all stream digitally, but we can't own it because we have to pay for ownership of a digital asset. And so money has gone from physical, analog, to electronic, and now it's going to digital. Stocks, bonds, currencies, commodities, every piece of real estate, every business, every asset, every piece of art, everything will be digital, and it will all be facilitated by digital currencies. But nation states, at least for the foreseeable future, will exist, and they'll have their own currencies. But that doesn't change the need for Bitcoin as an opt-out, right? As I like to call it, schmuck insurance against the bad central banks.
So Mark, when I'm looking at it, and you can see all these digital tokens that have the stable coins that have stood up, USDC, Gemini coin, like all of it, it's being stood up because there's a market demand for immediate clearance. There's a market to meet this. So when you go to BlockFi, you go to any of these lending platforms, like they have to have some type of stable coin so that they can immediately complete a transaction and close something out in an over collateralized way so that the risk is removed. And so when I'm thinking about central bank digital currency, am I gonna hold USDC or am I gonna hold some state issued stable coin that guarantees that the value is there and that they might not be running some type of fractional reserve stable coin? Like, it's a no-brainer. So when I'm thinking about like what the impact of that's going to be, like you're going from, I've been comparing it to like a dirt path that's connecting the two worlds of finance to a supercharged 5-lane highway. As soon as you bring central bank digital currencies into the mix, like it's just going to speed everything up, in my opinion.
No, it's unbelievable. The only thing that could have sped it up faster was Libra, now Diem. And, unintelligently, that's why the US government fought it. Because what they should have done is thought, wait a minute, they want to create a digital currency, stablecoin, that they'll immediately make available to 2.8 billion people around the world. And it's going to be backed by dollars. That would increase our clutches on reserve currency status. That would be a good thing. Instead, they fought it, and they're so far behind China and Russia in the development of a digital currency. I hate to quote Ricky Bobby, but if you ain't first, you're last. And so you need to be first.
So answer this for me, because when I'm thinking of if I want to take something in a stable coin kind of way, I would much rather have NASDAQ coin like QQQ that's tokenized,
Yeah.
right? That has immediate clearance when I'm thinking about storing value over the dollar. So what are some of the regulatory issues of why we haven't seen some type of product that has tokenized the NASDAQ or whatever?
You just said it, right? Incumbency. Incumbency is why things happen much, takes a longer time for things to happen. And incumbency is real in the sense that, you talk about 2-day settlement. It doesn't take 2 days to settle a trade, but there are 7 legacy systems, all of which are taking a scrape. And in the olden days, right, there was a float that you could play. There's still a float, 0.5% or so, but it's just incumbency and switching costs. And I use the analogy all the time of, again, right, a little before your time, when I was growing up, I'd run home to watch certain TV shows, right? You had to be in your chair at a certain time. Or on Tuesday night, you would sit down with your TV tray and you'd watch Happy Days and Laverne and Shirley. Well, that's gone. But here's the crazy thing. How did ABC, NBC, CBS? They controlled everything. They controlled content. They controlled our eyeballs. They controlled our behavior. How did they lose all their market cap to Netflix? Because they were unwilling to change to a subscription model. They didn't want to lose their ad-based revenue model because their stock price would get hit. Stupid. And I think the same thing happens here. Why? I was actually talking to the head of derivatives for one of the big 4 banks. And we were having a chat about, he knew we were big investors in BlockFi. And by the way, that thing that you let me sit in on last week, one of the best interviews. I mean, you've done a lot of great interviews. That was one of the best. It was just awesome.
Thank you, sir. Thank you.
No, you're the best. I mean, that's why I'm doing it with you. Look, on Bitcoin $1 trillion day, there's no one. Well, not true. I would actually like to be with Dan Moorhead, who introduced me to this whole thing. Not over you, but I would love to be with Dan right now. But other than that, you are the only person I would want to share this night with. So, and it's because, what he was saying is, yeah, I know we should buy them, but now they can't, because now Zach isn't going to take it, because people like us have given him enough money. Well, and some big guys who are bigger than us are now giving him a lot of money that he doesn't need them. And they had a shot probably 2 years ago to do that. But what did they do? They issued their own coin, which, wasn't a smart move.
Talk to us about what it means now for institutions that you're looking at Bitcoin at $1 trillion. Like,
Yeah.
What's going through the heads of all these hedge funds? What's going through the heads of these banks, these large tech companies that got massive balance sheets? Like, what the hell are they saying in the boardrooms?
Well, FOMO turned to uh-oh, turned to oh no, turned to oh, and they're coming, and you have no choice, right? You, as a corporate treasurer now, after Saylor and Elon and others, you have no choice but to have the conversation. And I loved Uber. The CFO said, we looked at it and we decided we need our money to be safe. And I loved Pomp's response.
Pomp nailed it.
You don't make any money. So what money are you talking about? You have to make money. And I think the reality is they're all coming. And again, I was on this conference call with a bunch of guys that get together every 2 weeks, and they invited me to talk. And there's some big dogs. I mean, it's really cool. When you're young, you have all these friends, and it turns out some of them turn out to be really amazingly important people. So this group of guys have been getting together for years, and they invited me to this, and I'm like, holy moly, this is a cool group. But what's interesting about it is they get together and they talk about all kinds of different things, but each of them have these important roles, and all of them were talking about, look, I missed it, I was wrong, and I keep a list. One guy was the head of derivative trading. He said, I keep a list of all the funds, right? And 2 years ago, it was this long. And a year ago, it was this long. And now it's pages of firms that everybody would recognize. And all of them are either already here or are calling me up saying, how do I get? And this firm actually in the coming weeks is going to announce crypto clearing for the first time. Again, after saying for 2 years, nope, not real, not. So it's coming. And
so you think when the first quarter closes out, it's just going to be bananas?
Totally bananas. Because here's the thing: when it first started, and it was a science experiment, right? That people didn't really understand, and it was really relegated to the fringe. And I talk about this all the time, right? All great technology starts at the fringe, right? Who had the first pager? Drug dealers. Who were the first internet users? Porn, right? It always starts at the fringe. Why? Because the fringe is locked out of the traditional world. Why did the cannabis industry start using crypto? Because they couldn't get banking accounts. So it's not that they're bad, evil people. They're just trying to make a living. And so if you think about that, in the early days, kind of the Silk Road days, it was easy to say, it's not real. Just like, pagers aren't real, and I'll never have a cell phone. Now I have two. Or Steve Ballmer's mom, you'll never have a PC in your house. Here we are talking on a PC live. I mean, which is mind numbing in HD, by the way. So if you think about, I said, the end of this quarter, all of these companies are going to come to this realization that it's not a science experiment. The FUD, right? The fear, uncertainty, and doubt. Oh, it uses too much electricity. Oh, that's not right. It actually saves electricity. It's only used by drug dealers and criminals. Oh, well, they actually use more money than they do Bitcoin. Like Katie Hahn, the partner at Andreessen Horowitz, says it best. She says, look, I was a prosecutor for 20 years. I was the gal going after the bad guys. And the choice between fingers on a keyboard and sack money, I'll take fingers on the keyboard 100 days out of 100. So I just think.
Hey, Mark.
Yeah,
we got a question, and I think this is a pretty easy one for you to answer, from Jacob. He asks, do publicly traded companies have to wait until the end of the quarter to announce their purchase?
They have to wait until they file, is it the 8K? So it doesn't necessarily have to be the end of the quarter, because different people have different quarter ends, but you do have to file first. And so I think it's an 8K report. I'm not 100% sure about that, but I think that's what it's called. And so I don't think it's going to be a tidal wave. I think it's going to be a ripple. But like the butterfly wing, the ripple on one side of the ocean, by the time it gets to the other side of the ocean, is a tsunami. So I think that tsunami is probably still this fall. Look, this fall, you talk about nuts. Like right now, people have super FOMO. They're looking at this. They're looking at 56,000. They're like, oh my gosh. When it's 100 and through 100, that's when the mind numb really kicks in, and the scramble to get involved. And I don't remember who said it, but there aren't enough Bitcoin in the world for every millionaire to have one. There's barely enough for every billionaire to have one. So at some point, we're not going to be talking about full Bitcoin. We're going to be talking about Satoshis anyway. So the scramble is going to be on. And ultimately, if you think about it, how many corporations have gold? Right? How many individual investors actually have gold? Governments have gold. I mean, it's not a huge number, but some. And yet gold has, and for 5,000 years, has had this incredible stability as a store of value, because it's accepted by custom. And I think what's happened now is Bitcoin, through the network effect of belief systems, and it goes back to that original quote from Satoshi, whoever he, she, they are, you may want to pick some up just in case it catches on. Because if everybody starts to think the same way, it becomes a self-fulfilling prophecy. And that's exactly where we are.
So when I looked at the Elon impact, you got the world's richest person putting this on their balance sheet, which really surprised me, to be honest with you. I was not expecting Tesla to be the big tech company that entered first, mostly because they just didn't have the free cash flows.
Correct.
Like an Apple or whoever to really kind of do the play. They couldn't really afford to have that kind of volatility for something that is, they're just so cash intensive right now. But I had recently heard that how it became so obvious to him is because of the energy piece of it. Mm-hmm. And when you look at his batteries, these battery units that he's trying to, the capacitors that you can basically harvest the energy off your home or wherever.
Yep.
When you think about where Bitcoin mining starts plugging into increasing the load at which energy can be, the level at which energy could be produced for a grid. And if you're not using the full capacity of that, it could still be utilized in a way for Bitcoin mining. And I think he was starting, from what I hear from different people, is he was starting to see this as being a competitor to some of the stuff that he was developing. And it really kind of caught his attention in multiple directions. I mean, everyone knows that he was the founder of X and how it got integrated into PayPal. And he's very familiar with this idea of creating sound money and whatnot. So I'm kind of curious to hear some of your thoughts on Elon.
I think that's a great narrative, but I don't think it's right. And so I'm not gonna go as extreme as I would like to on this topic, because I don't want to make a whole bunch of people mad, because the guy has become a cult hero now, not Elon, but Saylor. I think what we have to remember is, to your point about no free cash flow, right? Tesla doesn't make money. If it weren't for selling energy credits, they would have never even made a GAAP profit, but they don't make money. I'll argue they'll never make money. And if you look at MicroStrategy, they didn't make money last year. So if you're a company that isn't making money, your core business is kind of one thing people have learned is, if you can create buzz around your company, the market cap can rise disproportionately to the change that you make at the company. And, Saylor bought $1 billion. Now he's going to buy another $1 billion, but his market cap increased 10x that. It's really good. And, you don't have to go too far back, only 20 years, to MicroStrategy being the bane of the shorts. It was the GameStop of 2001, right? It went from $3 to $100. They carried all the shorts out because they said this guy has no business. Then it went to 200. All the shorts came back in. They carried him out again. It went to 300. Finally went to $331 a share, and then back to 3. So the shorts were right, and Saylor actually got convicted of fraud by the SEC, but he rebuilt and retooled and stayed in business. And I actually think he's a genius. And I love what he did with buying the keywords. He said, English language is going to be around for a while, internet's going to be around for a while, so I'll buy these domain names. Genius. So, and I think he's really smart to embrace Bitcoin as a store of value for the balance sheet, and everything he says is very intelligent. But I actually think it's a little bit of a Hail Mary for the company. Whereas a company like Apple, they have so much cash. If they put $1 billion in, it doesn't do anything for them. Nothing. Now, what would it do to perception and therefore market cap? Probably would do something. So I'll argue it doesn't surprise me that it's the non-profitable, well, Tesla's not small, but MicroStrategy was, companies that think about first. I think Elon is the king of all media, right? He's the P.T. Barnum of our age. He believes all publicity is good publicity and any chance to get out there. But it actually worked, right? His market cap went up way more than $1.5 billion, even though the asset that you have a claim on as a shareholder is only $1.5 billion. So it's not like it.
So on the MicroStrategy, so I've looked at the MicroStrategy numbers quite a bit, and he was making about 30 million. Now, when you look at the market cap for where it's at, like anything, I mean, it's capitalized at just an insane level, or prior to putting Bitcoin on the balance sheet, it was capitalized at an insane level above the earnings. But he was, I mean, he was kicking off a small amount. I think it was around 30 million is what his free cash flow would have been. But now here's what's crazy, Mark. So if you think, and he's got more than, let's just say he's got $1 billion. I think the number is actually closer to 2.5 after he closes out this debt deal in Bitcoin alone.
Yep.
And so let's just use 2 billion, right? If you put that into lending today, right? And let's use a low number. Let's just say let's just say he's going to do 4% in lending.
Yep.
Right? He's knocking out $80 million a year just in interest revenue. Interest income.
Brilliant, right? And he's basically converting to a Bitcoin bank, right?
Yeah.
And that is genius. I said, I think he's a genius.
I think he's a genius.
I do think there's a little bit of a promotional piece in addition to, now that he's got the asset and now the asset's appreciated, now he can really do some cool stuff.
So everyone wants to talk about the contango. So I've said my piece in many different places. I'm kind of curious to hear your thoughts on it.
Yeah, look, December 18th, 2018, I tweeted Bitcoin is around 19,000, a little under 19,000, 18.7. And I tweeted out that CMA futures are starting, and that could be a problem, and it could trigger a pretty serious sell-off. The way anytime you can create paper anything in the futures market, paper barrels of oil, paper bars of gold, paper ounces of silver, paper Bitcoin, you run the risk of markets getting out of whack and one side pushing, which is exactly what happened. We ended up pushing into backwardation and a pretty serious bear market. Right now we're in contango, so the opposite is happening. The speculators are betting on the price rising, which triggers more selling of futures, which triggers more price rises, and it is a self-fulfilling prophecy. So, but
Mark, here's the thing that for me is just so confusing about this, and it makes no sense for somebody to bid the price of a future contract, okay, to be higher than the spot when there's no storage cost. There's no limitation on storage of any, like if we were talking about the oil market, and there was some supply demand shock like we saw back with COVID, and all the scarce storage is very limited, and basically the cost of all that storage is getting bid into the futures price. Like that makes sense, but we're talking about a digital delivery.
Correct.
That it's insane.
No, well, but again, it has to do, and so that analysis is spot on, and there shouldn't be a natural contango.
Ever.
There should be in oil or gold to some extent because you do have to store it. But you're right, in a digital asset there shouldn't be, and therefore what you have is you have different cohorts of traders and speculators and hedgers. And so one of the challenges you have right now is I love when people throw up the chart of the net short position of the big commercials. They're short Bitcoin. Like, yes, they're short Bitcoin against their long GBTC private positions. Like, what are you talking about? Like, you buy the private shares of GBTC, you hold for 6 months, you short Bitcoin against it, and in 6 months you make, on average 20% return, riskless, and you can lever that up and make more. So that short position isn't really a natural short position. It's not like a directional bet. It is a hedge against a physical position. And I think the same thing is true here. Is if you get certain hedgers out of whack, because for every hedger there has to be a speculator. And again, I don't use that term negative. It's just a term of art. There has to be someone on the other side of the hedge. And so if the hedger is short, then the speculator's got to be long. And if there's more long futures contracts, just supply and demand, that's going to push the price higher, which is going to create that contango, which then, because the normal world has ways they process that signal, right? In a normal contango world in commodity futures, you would view it as a positive. I think what's happening is you're getting the same kind of view, even though, to your point, it shouldn't be the same view. It shouldn't be the same trigger, because there's no natural correcting mechanism like there is in storage, right? On the day of delivery, you either deliver or you don't.
So this is Joe Burnett's comment. He says it's because it's easy to leverage long futures. And, I see it. I think what's playing out is you have a structural thing that's at play here where people want to have access to the Bitcoin price action, but because of charter or because of some type of regulatory constraint, the only way they can do this is they've got to borrow Bitcoin, write contract. Well, you got the people that are doing the long short just to capture the 20% spread that's there, but then the other side of it is the people who are buying these contracts because maybe they can't hold the underlying, but they can hold a contract, right? Yep. And so we're seeing this really unique dynamic where people are incentivized at a really high level to step in here and write these contracts and capture this risk-free spread. Which is then locking up 100% escrow. Well, they're locking them up on the borrowing side, and then they're locking them up whenever they write the futures contract, which is just taking more and more supply out of the market, which is causing the price to run higher, which is incentivizing more people to come in and buy the contracts.
Yes, and herein lies the biggest challenge of this market, and why the one knock I have is that in the early days there wasn't more of I don't like this term, but airdrop, right, to spread the ownership more broadly when it didn't have much value, because you do have this problem, right? And I don't know what the numbers are, call it 60%, some number of hodlers that, basically said, look, there's no price I'm selling at. And so the incremental market is pretty small because you got the lost or stolen coins or the blacklisted coins. And so you're shrinking down your available supply. And then you've got this new phenomenon, which is the locking up of other incremental supply in the collateral for these contracts. And so the free float keeps shrinking. And invariably, what does that do? It creates more volatility, both directions. So right now,
which just attracts more people into the trade.
Exactly. And look, and that's why I do think this year is going to be wild. I think we're going to shoot way past fair value. To me, July this year, fair value is around 100K. And, it's like, where do you pull that number out, right? Well, 2014, I ran into this guy on Twitter, of course, where I meet everybody cool. And he put together this model. And it was the first time I got introduced to the whole Metcalfe's law phenomenon. And the model predicted the fair value of the network based on fundamentals, not on price. Because remember, price is a liar. Price goes up and down and up and down because that's what two people decide to exchange a small amount. Value accretes based on certain criteria. And that can be value of a computer network, a telecommunications network, a computing network like Bitcoin. Ultimately, this model said in November of 2017, fair value be 10,000. It was off by 6 days. And it says fair value July of this year is 100,000. And I think that's pretty right. Now, the problem is you don't stop at fair value. In fact, you almost never hit fair value. You're always either above it or below it. And so, we got above it to 20, then we went all the way down to 3. And now we've come back and we blew right through fair value, which today is, we're still a little bit below. So between now and July, it's 100. So right now it's probably close, probably coming up on 60. But we'll blow right through.
But Mark, we're talking. But so here's my only issue with this model, and I completely agree with everything you're saying. But this is the only area that I would push back. Is we're dealing with money, which has an inherent feeding frenzy type mentality to it. If people feel like they can even make a cent more, they're going to try to do it, right? And we're talking about a market that is in the background of this Bitcoin thing that's happening, that we have just crammed 120 trillion units into. Like literally, just like you think of like a little tiny bin, and we've literally crammed 120 trillion fiat units into this thing, and we've said this will yield nothing. Everything inside of this little can right here is going to yield nothing, and you're going to like it, right? So all the people that own all that crap inside of this 120 trillion unit can are now looking over in this thing off to the side and saying, these people with crazy laser beams coming out of their eyes are making 200% a year for a decade straight, and it looks like they might actually do 1,000% this year. Should I keep holding this thing that now I'm being told they're going to take money from me instead of me getting any type of yield in nominal terms?
No, look,
like it's insane.
It is insane, and it's insane, but logical in that it's like the boiled frog.
But how the hell can't people on Wall Street see this? Like,
no, they can't. They're paralyzed.
There's people. But Mark, no, I'm seeing people, really well-known people that you would think were the brightest people on the planet on Twitter, debating this as if the
crazies. Okay, yeah, the people who have put their stick in the ground and now can't change their mind because their ego's too big. Most deadly sin in our business.
That's what it has to be.
No, it is because being wrong is not a sin, right? I'm wrong all the time, but staying wrong is a sin, and that's what will kill you in this business and in life. And so those guys, I've been tweeting, where's Nouriel now? And then he came on with the big rant the other day, or Peter Schiff, right? You can't, to your point, you can't look at the data. You can't look at the facts and say what these guys say, right? You just can't do it. So that is obstinance and ego. Because here's the thing. I won't speak for you, but I think I could, that you, like me, started skeptical, right? When I met Dan in 2013 and he told me that he was giving back $1 billion of real money in a hedge fund, charging 2 and 20 to spend the rest of his career doing Bitcoin and blockchain, I literally thought he was crazy, right? Literally thought he was crazy. And like, okay, tell me more. And I was too stupid, skeptical, to get it right away. But then as soon as I did the work, I went from 0 of my time 8 years ago to now 75, 80%. And here I'm at 9 o'clock at night on a Friday having so much fun. I'm having more fun.
I know, me too.
20 years.
Yeah.
Because once you do the work, to your point, you can't ignore it except through obstinance and stubbornness. And I call it intellectual laziness. It's intellectually lazy to repeat FUD. It's intellectually lazy to just dismiss something that has gone from literally a white paper to $1 trillion asset, right? You can't just ignore that.
Faster than anything that has ever capitalized itself to $1 trillion by half. I think I saw some chart that took Google absolutely. 2 decades or whatever. This thing did it in 12 years.
Look, I've talked for years that this is simply the evolution of computing power. So in 1954, it was the mainframe, IBM, DEC, Wang, my favorite. Then 68, the microchip, 82, the personal computer, 96, the internet, 2010, the mobile net, and 2024, which is still 3 years from now, the trust net. So we haven't even gotten to the good part yet. In 2024, people are going to have the aha moment that, way, this is a big thing. The internet is bigger than a fax machine Thank you, Paul Krugman. And I mean,
how do people still listen to that guy? Hey, I want to get back to the contango real fast. There was a question that Marshall asked, and I'm dropping it in there. Marshall said, Preston, can you explain the end game on contango? Instead of explaining the end game, which I have no clue how it ends, I would rather posit this question to you, Mark. I had a conversation over the weekend with Plan B, and I said to him, if these spreads that are 20% now get wider as we go into the summer and the price is running, it's getting violent, right? And these spreads get wider and wider. For me, that's a signal that maybe this thing isn't coming back into these numbers that we think this stock to flow model is suggesting. To me, that's signaling, oh my God, people are being incentivized to lock up coins at an unprecedented pace, pulling them off the market, and it's only going to cause this thing to even go crazier. So I'm curious, do you agree with that?
I think that logic is impeccable, and it's hard for me to debate it, and that's why I do believe that we're going to go well past what I believe network fair value is. And I think a lot of it is this supply and demand. And I think the one thing that changes it for me is the CFI piece, right? So we got TradFi, and then we got DeFi, which, a whole topic we could spend hours talking about. And then we got the CFI piece, which is the centralized, the Coinbases, the BlockFis, the Krakens, the Geminis. And they do function as a way of creating fractional reserve banking. We can't call it banking, so financial services. And I think that will, create incremental supply, even though the core coin is locked up. So kind of the same way that our financial system works, in that if you look around the world, the best economies are the ones that have great fractional reserve banking systems. The bad ones are the ones that don't. And that's because, whether we like it or not, it is one of the great inventions of our time, because it allows money to work harder as long as you keep the velocity rising. And that's the problem we have now in the TradFi world, is velocity is not rising. And so they're creating these units in the coffee can, as you described, the Nesca, or Sanka, the decaf coffee can that all our grandparents had, and they put their money in it. And we got that 120 trillion unit can. And the problem is that no one's moving it around. And without velocity of money, the value of money will continue to depreciate. And the things that we need to pay for with those fiat units will go down. And so the one thing that I am willing to acknowledge in this question. So I do my 10 surprises every year. I borrowed from Byron Wien, or stole from Byron Wien. And last year, my surprise was that Bitcoin would have a great year in 2020. But I said it wasn't because Bitcoin necessarily was going to do so well, but that the dollar was going to do so poorly. Because we never talk about Bitcoin in Bitcoin. We talk about Bitcoin in dollars, BTC USD. So that's the price, right? When we say 56,000, that's not 56,000 Bitcoin, that's $56,000 per Bitcoin. And so part of that appreciation is not that more people are using Bitcoin, more Bitcoin are being taken out of circulation. It's that the unit that we value it in is depreciating. And that's why I say the stock market actually isn't up. Everybody's like, oh, the market's at all-time highs. No, it's not. It's only at all-time highs if you value it in a depreciating asset. Over the last 3 years, if you denominate in gold, you're down 20%. If you denominate in Bitcoin, you're down way more than that. So when you
So Mark, the only thing that I would push back on, so I don't know if my narrative on why the contango exists is due to regulatory constraints, and the people that are bidding the tail of it higher are bidding it because they have to own contracts and not the underlying. Like I'm of the opinion that
that's definitely part of it.
So if that doesn't change, if the regulatory constraints that are pinning it down still are in place, the contango won't go away.
No, that is an excellent point, and 100% agree. There is no natural gravitational pull back to backwardation.
And here's the irony: those restrictions, those regulations that are causing this, are in place to prevent systematic risk. Right?
Yeah.
Think about it. It's there to protect the overall system. But in this weird, twisted way, like everything for the last 12 months has been upside down in reality, right? In a weird, twisted way, it is actually causing the systematic event.
Yeah. And what is so interesting about that, and again, really insightful, is all of us that are involved, I think there are a lot of smart people. But the really, really, really smart people are the ones doing what we're talking about. They're the ones that sit inside these big, giant trading houses that are playing in the futures market the same way they do in the equity market every day, right? The high frequency traders. So I'll tell you the story. So I was in Chicago once having dinner with a friend of mine from Notre Dame, and he worked at Jump Trading. And so he's got his Russian programmer and his Japanese or Chinese programmer, and we're having dinner, and they're trying to explain to me what they do, and my eyes are glazing over because their brains are bigger than mine. And at the end, I said, "Okay, so just let me get this straight. So tell me what it is that you do, just generally." And he says, "All right, it's pretty simple. We never go home with a trade. We're flat by the end of the day, and we shoot to make 1%. And I'm like, "What do you mean? Like a month, a week?" He says, "No, every day." I'm like, "Shut up." And he says, "Yeah." I said, "Do you know what that?" He says, "Yeah, that's why we don't take outside capital. If there's ever a transaction tax, we're dead, right? Transaction tax would kill that business." But he says there is
so their lobbying is strong.
Lobbying is strong, and so, but it was just this aha moment for me where it's like those people, we the average investor, we're not going to outsmart them. So we who want to own and hodl, we benefit from these people who are building this flywheel of supply demand imbalance, and God love them, but they're minting it. I mean, they're making so much money. I went to Susquehanna, and I mean, you would not believe the number of people and machines and just talking serious brain power that they have dedicated to crypto. And when you ask the average person, does Wall Street know about crypto? Oh, they don't know anything. Yeah, they know a lot. And there's a whole bunch of them. It's like the people who thought that Citadel lost money on GameStop. No, they didn't. They're the largest market maker in options in the world. So yes, you all are having fun punting in options, but they make money on every trade.
All right, so I had some questions. Let's see here, because we didn't even get to any of them. We've just been.
And it's so fun. I was just so everybody knows. So I hope people, BYOB, and not just bring your own Bitcoin, but I opened a bottle of wine tonight. My daughter came over for dinner with the grandkids, and I poured it out, and it was orange. Like, how incredible is that? And she said, "Oh, God, that's a thing." I'm like, "What do you mean that's a thing? I didn't know there was such thing as orange wine, but I guess orange is the new black." And I'm wearing the Bitcoin orange pants, along with my Magic Internet Money socks, which you saw a picture of when I tweeted out earlier. But look, this is a big day. And the fact that I opened orange wine just by accident is pretty cool.
On the $1 trillion day. All right, let's talk about rates. They're creeping up. 10 years at 1.34%. I mean, this it's screaming for yield curve control, right? What are some of your thoughts on, or what you're hearing on this?
Again, my big surprise, or one of my 10 surprises, is by the end of the year, we're cratering to new lows in rates.
Because of manipulation.
Well, here's manipulation. Yes, because we have no choice, right? There's so much debt in the world, and none of it can be paid back. And we can't afford higher interest rates. The government can't afford higher interest rates. So we will have lower interest rates. And the reason this makes sense is if you look at Japan, right? Japan has been in a declining interest rate environment for 30 years. And why? Well, demographics. So they have bad demographics. They have too much debt, right? 226% debt to GDP. And that leads to deflation. And so Europe is 9 years behind Japan demographically, and we're 11 years behind Japan. So everything that happens in Japan happens in Europe 9 years later, and US 11 years later. And so if you look at Europe, they now have negative rates, just like Japan. And we were flirting with them before we had this little rally, because people think that, somehow if everybody gets vaccinated, we're all going to go back to living normal lives. Yeah, but that doesn't matter, because supply and demand for air travel and restaurants isn't going to change the fact that the government can't service the debt. And more importantly, here's the crazy stat. 40% of the companies in the S&P 1500, so big caps, mid caps, small caps, cannot cover their interest with their EBITDA. So not only can they not pay back their debt, they can't even cover the interest. So the idea that rates are somehow going to rise, zero chance.
No, I'm with you 100%. Like I'm calling them boomer rates.
Boomer rates and millennial rates.
So your boomer rates, they're going to have, they're climbing up right now, but there's no way that the central banks are going to allow this to continue to sell off. They're going to bid the hell out of it. It's going to start collapsing. And now think about what we were talking about earlier with this contango trade. 20% risk-free, right? Mm-hmm. And you got the cost of borrowing in boomer rates at nothing. It's like just taking a big giant can of gasoline and pouring it on the trade.
Oh, look, how amazing is it that I can borrow in the boomer world as a boomer, and I can go over to the DeFi world and I can make, forget 20%. There's some places I can make multiples of that. 20 is great. And the fact that I can make 20 risk-free, or I can take a little bit of risk and make, 4 or 5 times that and finance it for free. And you don't think Paul Tudor Jones is doing this in size. You don't think Susquehanna is doing this in size. You don't think, Renaissance is doing this in size, or Citadel. They're all doing it in size. And it's interesting because we've set up a system that encourages profligate spending, mismanagement of your balance sheet, right? Lever up to the gills. Michael Saylor just issued $1 billion of convertible bonds with 0 coupon.
Oversubscribed.
That's like when Amazon did it. They issued no-nos, no expiration, no interest. That's not a bond. That's equity. But people buy them as if they are bonds. And I don't really understand, other than, I guess if you immediately hedge that and then converted on maturity into equity and you believe the price of Bitcoin is going to rise, that's a pretty good trade. But why wouldn't I just buy Bitcoin?
Because they can't. They're chartered, right?
Okay. There, you hit it. Yep.
It's that he is tapping in to, I don't know how big the hedge fund space is for fixed income, that they're chartered, that they have to be in fixed income. Convertibility, sure, right? Yep. But he's the first guy that's tapped into this dam of capo that is well into the trillions.
Oh yeah.
And darn well there's Bitcoiners in the space, but by charter they can't buy it. So I interviewed Michael and I said, Michael, I think you could do your next issuance at a negative rate. And he laughed. I swear to God, he laughed. He laughed at me, and he said something like, I can't remember what he said, but it was something clever, like, yeah, wouldn't that be awesome? And I was like, I'm being dead serious. I think you could do your next issuance at a negative yield, and you would still be oversubscribed.
Incredible.
I mean, it's nuts. It's showing. It's, you know what it is. I look at it as exactly the same to what we're seeing in the contango market, or in the contango trade in the derivatives market. Is the exact same thing that Michael's doing. Is you have this regulatory straitjacket on the market, a market that's yielding nothing or negative, and they're screaming for ways to get access to Bitcoin, and they're getting creative, and they're finding ways around it. And so think of it. If we want to, assuming that the narrative that I got, that it's a regulatory thing that's driving the contango, the only way they can prevent that from happening is if they remove the regulatory constraints. They take the straitjacket off. Well, what the hell happens then?
Yeah. Well, no. Yeah. Then the dogs get off the porch. I should have thought about it that way, because that's exactly what it is, right? It's all of these units. Like, we used to have a trade when I was at the university where the state, by law, here's a crazy thing, by law, written in the 1700s, cannot own non-investment grade debt. Now, just let that sink in for a second. 55% of the pension fund is in equity, which is junior to non-investment grade debt. But the law was written when they didn't have junk bonds, so they weren't allowed to own it. So they had this portfolio of bonds, 45% of the fund, and every time a bond would get downgraded, they would have to sell. So it would fall in price. You could buy it, and then 6 months later, when it got upgraded, you could sell it back to the Treasury and make a riskless profit, because they had to, by statute, by regulatory, they had to sell. And there are lots of those regulatory arbitrages. And you just inspired me, Preston, that I think I need to convert Morgan Creek to a Bitcoin bank. I'm serious. I think I need to issue a bond, buy Bitcoin, deposit it, and create a Bitcoin bank.
You'd be oversubscribed as well. And I mean,
wow. Look, you're going to be responsible for.
Here it is, right here. Don't forget about me, Mark.
I will not. I will not.
All right, so
that's a great idea, man. I might get that done on Monday.
I guess the whole point of why I keep bringing up kind of both of these angles with the fixed income issuance with a convertibility piece to it, and then you combine it with what we're seeing in the derivative space, is because I'm saying, I'm looking at this model, this Metcalfe's Law model, and I'm saying, I don't know that how much longer that model is really going to hold.
Yeah.
Like, everything that I'm looking at and everything that I'm seeing is suggesting to me that this puppy's going all the way.
Yeah.
Right? And I don't want people to, I'm not saying that's what's going to happen. I'm just saying that the probability is probably higher than people are giving it credit for.
Own it. You are saying it. And you own it. Because, no, you should own it, because here's why. Look, and I've been lucky in the sense that I say all the time, I had the best job in the world for 20 years. I got paid to talk to the smartest people in the world about investing, right? I went around the world trying to find managers, and I've met with Nobel laureates. I've met with, every hedge fund manager you can imagine. I've given them all money. And I was with this manager up in New York, and I won't name names, but he is one of the legends of value investing, runs $20 billion firm. And he was an early Bitcoin supporter. And he believes that, I was talking earlier about, Bitcoin today is equivalent to the FANG stocks in terms of network size. And the next is gold. And then after that is M2. And he, as you just said, he absolutely 100% says all your models are wrong. We are absolutely going to M2. We are absolutely going to $86 trillion of network value, which means, a
way more than where we are now.
$5 million. Actually, no, let's do that. Let's do it. 86.
I don't do public math. Do not do it.
Yeah, I know. 86 times 56. Yeah, $4.8 million price. And people can't comprehend that. And that's why I say we have to go to Satoshi's, because it makes your brain hurt less if we divide that by 2.1 quadrillion.
So Mark, this is the other thing I want to tell you about these two trades: the debt issuance, the convertible debt issuance, and the contango trade. On both of these trades, both parties are happy. Okay, think about it. When are both parties that are conducting a trade? I've always had the saying. Yeah, I've always had the saying that there's always a smart person and a dumb person on the side of every trade. And it only takes a little bit of time to figure out who was who. But on this particular trade, on the debt side, Michael's thrilled, right? Thrilled. He's getting all this money to slap all this Bitcoin on his balance sheet. The people in the debt market that are buying it, they're thrilled. Because think about it, if they can convert it in 5 years and they're dropping it into their fund and Bitcoin goes the way that everyone thinks it's going to go, they're going to clobber. There's nothing else in their portfolio that's going to match the return of that issuance that they're buying. Now, if he starts jacking the strike to some astronomical level, which I think he needs to do to start getting to a point where he's not oversubscribed, well, that's a whole nother story. But at the end of the day, both of these parties are happy. Now let's go to the contango trade, okay? The person that's buying this contract at a premium to the spot, even though there's no storage cost, is happy because they're getting access to something that actually has real yield, and they're living in a world where there's no yield.
No yield, yeah.
The person who's writing these contracts is knocking out, just think of it. If you've got, let's say you have 10 Bitcoin, you go into a lending market, you borrow against the Bitcoin that you got, you step in here, you write the contract, right? They're banging out another 20% on top of the coins that they continue to hold that they're not having to sell.
Right.
They're happy. So when have you ever seen anything where every single party involved on a trade that's banging out these kind of returns is winning?
Yeah. Again, to that point, right? When JP Morgan manipulates the price of gold, they're happy, but all the gold hodlers aren't happy. So, okay, perfect example. When IPOs underprice and the fat cat clients get rich, the companies are unhappy, so that doesn't work. Yeah, I'd be hard pressed to come up with an equally happy.
Because what you're really talking about is you're talking about people who are. I see a person here wrote something in the chat that said, "Hold on, this chat's moving so fast." Here's what Martin said. He says, "So who's losing, right?" And that's a great question, because the people that are losing are the people that are just not involved anywhere in this space.
Yeah.
Right. The people who are winning on both sides of this. There's one that's winning more because they have a longer term focus. But the people who have a shorter term focus or have a regulatory restriction.
Yeah, well, the loser is the boomer. It doesn't have to be a boomer, but it's mostly boomers who own that bond fund, bond mutual fund.
It's a joke.
Yielding 1 or 2, and inflation is chewing up their yield.
And all these people that are locked into pension funds, who have it's like a straitjacket of choices for them of what they can purchase. Because here's, in my opinion, where this is all going, is there's going to be a day when everyone starts looking at these rates over in Bitcoin land, and they're going to say, these are real risk-free rates, okay? And when that day comes, it's going to melt down the equity market like no one has ever seen in the history of equity markets. right? Because if these, I mean, you can go out today. USDC is banging out 10%, right? So if we say that's the risk-free rate is 10%, because that's what we're seeing in this free and open market right over here, okay? And I would argue that it would be 10% whether it was a central bank digital currency or it's freaking whatever stable coin that we're talking about. Because that, to me, that's just silliness to think that there's that much of a difference in how the market would be pricing it, okay? So if it's 10%, and equities are at 30 or 35 PE, those PEs have to come down 60 or 70% just to come to parity with a 10% yield that you're seeing on USDC right now, right? Not to mention that there should be a premium bid into that, which would take it lower than a 10 on the PE for these equities.
Look, the equity bubble is epic, and to your point, it's even more epic and more like it's easy for people to try to rationalize using the Fed model, right? Which is, the earnings yield of the stock market is so high relative to the yield of treasuries. I'm like, no, that doesn't work, right? At 2% interest rates, that model breaks down. Because if we extend it to its illogical extreme, if interest rates are zero, are stocks worth infinity? That doesn't make any sense. And so, to your point, if the real yield that's available in the world is 10, now let's say it's not 10, let's say it's 5.
I don't think so. My opinion is that 10. I'm being super uber conservative.
Yeah, no, I know.
With 10,
in a normalized environment where, because the reason it's 10 or 15 or 20 or even higher is a supply-demand imbalance. The reason, when Zach was on the show, the reason he can pay depositors 6 to 8 is because the demand for loans means he can charge 20. And
it's massive.
20 minus 8 is a really good NIM. Banks make, sub 2%.
But that demand is only going to go up.
No, right? It is. But what could change, or what will change, is the supply could go up, right? The number of exchanges, is that what you're saying, that it's going to get commoditized? The number of people that are on this live stream right now is some number. If it were 10 times or 100 times, right? Where the light bulb, like, that commercial where people walk around and they got their 401k balance above their head. If that was actually a light bulb that went off and people said, oh, I get it. I get that there are these different worlds, the TradFi world and the DeFi world. And I need to move some portion. Again, it doesn't have to be all of it, but I need to move some portion of my assets out of this world into this world. And, what's the percentage today? The estimate is 50 million wallets around the world. Okay. On 7.5 billion people or 7.7 billion people, that's still not very many. And let's say we get that to 1 billion users. I saw today someone said 1 billion wallets by 2025. Okay. That's still only 15% of people. So I think that supply demand is going to shift slowly, and therefore that arbitrage is going to exist for a while, which means I'm still in a job for a while, which is good.
When I'm thinking just in like a 50,000 foot view looking down, right? We've seen interest rates get manipulated through the federal funds rate, and then after 2008, we even saw it step into the longer duration end of the curve.
Yeah.
For 40 years.
Yep.
And now we're at 0. And we went from 16 on the 10-year treasury down to 0. Okay? Mm-hmm. When I think of it like almost like an elastic band that you have pulled and stretched so far to one way, and now all of a sudden reality hits and people are saying, oh my God, why are people borrowing at 10% interest for dollars when it just doesn't make any sense? So my opinion is you're holding this rubber band and you're about ready to let go. And this thing isn't going to go back to neutral or what you think these rates are, it's going to go way out to the other side. So like I'm saying 10% is what we're seeing today, but would 20%, 25, 30% surprise me? It wouldn't surprise me in the least bit.
No, that's a great point, right? Because you're right. The demand will certainly accelerate faster than the supply. It's good. It's good.
It just makes sense from everywhere you look on this planet. Things are rotating around each other, or they're oscillating or vibrating. Every single thing on the planet, right?
Yep. Yeah.
So when you look at these financial markets and you think, all right, so what's going to come next? It's just, for me, it's just like, I don't necessarily know why the mechanics might cause that, but from just a big picture point of view, it's just common sense. The rates, when this releases, is going to have to blow out.
Yeah. Well, and no, it's a very important point, and it really does go to, and again, why we decided to get together tonight is why does $1 trillion matter? Why does Bitcoin matter, right? Why does cryptocurrency matter? Why does blockchain technology matter? And it comes back to this evolution of technology and the fact that once a technological evolution begins, you can't put it back in the bottle, right? I mean, we went from analog to electronic. We're going to go from electronic to digital. That's going to happen. And everything will be powered on blockchains. And cryptocurrency is a use case of blockchain. And cryptocurrency is a superior currency system to fiat currency. And it doesn't mean fiat currency disappears completely, because governments kind of like it, but it means there now is an alternative. And that alternative historically was gold, silver, collectibles, art, things like that. Now you have this other asset. And the thing I love about it, and again, topic for another day, is you got the base layer protocol of Bitcoin, and then you've got Ethereum, which to me is like the www dot of this internet of value. And so many things are going to be built on that tool, the same way the internet was built on www dot. Right? We have lots of applications. You're using one now, right? YouTube, and we're using Skype, and we're using TCP/IP. But TCP/IP is invisible. That's the base layer. But we have to type in www dot theinvestorspodcast.com to get to you, and all of those developers that are now working. And this is why. Look, I feel like I'm reverse aging, because I'm hanging out with young, smart, hungry, incredibly intelligent people. And the only time I've seen anything like this was in '96, when we were big investors in the internet before it was a thing. And the migration of talent at that time was the biggest thing I'd ever seen, right? People leaving law firms and technology firms and, banks, and everybody was going into the internet. And now not everybody, but many, many, many smart, talented people are embracing all aspects of this evolution, and the innovation, there's the innovation part, but the part that I actually get more excited about, it's the conversion of the old to the new technology, right? What BlockFi does is not rocket science. It's not new. It's a new form factor for a centuries old structure, banking, but it's a better form. And, they're going to be BlockFis all around the world that become the digital banks. We invested also in Caitlin, who you need to have on your show if you haven't already, and, in her Avanti Bank. And, imagine a seated U.S. senator did laser eyes today. Seriously?
I think that was the news story.
I mean, come on. It's unbelievable. I mean, that actually triggered me to give in. I was not going to do it. I was not going to do it because I was just not going to be a follower. And then she did it. And I'm like, damn, okay, I'm in.
No excuses. No excuses.
No excuses. And it actually wasn't as hard as I thought it was going to be, because I'm tech challenged. But look, I could talk to you all night, but we can't. So I just think we're on the eve of a truly historic movement away from legacy systems to an entirely new financial system. And
it's going to be so different than what people were used to.
Oh yeah.
In the respect of over collateralization. Like you're going from a system, traditional system, that's all about fractional reserve. It's all about, I'm going to loan out more GameStop stock certificates than I actually have. The whole system is that. The entire system. And you're transitioning to a new world where it is all about over collateralization.
Yep.
And if you don't have over collateralization, well, guess what? You're never, ever in a million years gonna get my money.
Right.
Because I don't trust that you will make good for it. Right. Yeah. And if you're gonna give me some type of collateral and you want to not over collateralize a lot, you better darn well believe it better be very liquid, and I can liquidate it 24 hours, 7 days a week.
Yeah.
Right? Because if you're giving me a house as collateral and I can't step into the market and sell it real fast, guess what? I might give you 20% of the value of the house in a loan, right? People have not wrapped their heads around what this new world looks like. And let me tell you, it's coming at a breakneck pace.
Yeah. No, it is. And that's exciting. And what it also means is, in addition to just the protocols themselves, the opportunities to invest in all of these businesses, all of this infrastructure, and to me, it's the little e entrepreneurs, right? Not the big e entrepreneurs. Everyone doesn't have to be Vitalik and invent something new, or Satoshi Nakamoto, whoever he, she, they are. It's, hey, I'm going to create a brokerage firm. I'm going to create a bank. I'm going to create an insurance company. And I'm going to do it all in this new world of transparent, liquid, immediate settlement, trustless, no third party, no legacy systems, no 7 different systems. So it takes 30 days to settle a bank loan. Are you kidding me?
It's insane.
30 days, right? It's like, our investment in Figure, Mike Cagney, right? To get a home equity line of credit takes 30 to 60 days. He'll give you your money in 5 days. He tells you in 5 minutes if you're approved, which kind of sucks when he says no, but still, and you don't have to waste your time waiting for them to process your paper application, because they tap into your bank's API. They look, they say, okay, you're approved. And it's the merger of AI, predictive analytics, blockchain, cryptocurrencies, traditional financial services businesses, traditional technology businesses, but all of those kind of meshing together creates this new world that we're talking about. And you can stay in the old TradFi world, which a lot of people will, but once the money shifts, I talk about this all the time, there's a massive digital divide. Ask anyone over 35, who's your broker? Merrill Lynch, UBS, why? How much gold do you have? I don't know, 5, 6%. How much Bitcoin do you have? Are you kidding me? It's a Ponzi scheme. I would never own that. Ask anyone under 35, who's your broker? What do you mean? I mean, I got a Robinhood. You mean that? What's a broker? How much gold do you have? Oh, are you kidding me? The pet rock? Are you kidding me? How much Bitcoin do you have? I don't want to talk about it. Why not? Because it's a really big percentage of my net worth. So that divide is going to get exacerbated. My generation is going to transfer $37 trillion to the millennials. $37 trillion. And it ain't going to be invested in IBM stock. It ain't going to be invested in government bonds. It ain't going to be invested in even Tesla. It's going to be invested in DeFi It's going to be invested in Bitcoin. It's going to be invested in Ethereum. It's going to be invested in the 3 or 4 other, layers, protocol layers that come that look, we got the internet stack, TCP/IP, HTTP, SMTP, FTP, www. Bitcoin, Ethereum, Cosmos, Polkadot, FTP. I don't know about those last 3, but that's what it's going to be. And once those are ubiquitous and once those are invisible to everybody, all the other stuff that's built on top of it, it's going to be the greatest wealth creation we've ever seen in the world. Big statement. Why? Simple curve, parabolic curve, Metcalfe's law curve. This left side, parallel to the x-axis, is Web 1.0. Doesn't even look like much, right? That's Intel, that's Microsoft, that's Cisco, that's Qualcomm. That's a lot of wealth. Web 2.0, the knee of the curve, more wealth, right? More area under the curve. That's Amazon, that's Alibaba, that's Netflix. Now, as we go vertical and we go parallel to the y-axis, that's Web 3.0. That's a big area under the curve. It's not unlimited. It might be actually, but that wealth creation is why I get up every morning so excited about this opportunity, and why, despite my clients thinking I'm crazy, to give up the traditional world to go chase after this magic internet money. But it's not magic. It is money, and it's better than the internet. It's beyond the internet. It's the trust net. So,
Mark, let's leave it there. Let's call it the 1 trillion kind of night. I'm meeting my neighbors because we're watching WandaVision. Have you seen this?
I'm waiting. I'm waiting. I want to do it, but we're trying to decide if our 10-year-old can watch. So you'll have to tell me. But
yeah, I think so. I mean, it's insanely confusing, and I never have watched any of the. Is it Marvel? I think it's Marvel.
Yeah, the Marvel stuff.
Is it Marvel? Okay. Yeah. That shows you how much I know about it. But my neighbors are all into it, and so I've been watching it from the beginning, and I was insanely confused, and it's getting more interesting. So
no, look, you are a good man to delay that fun to hang out with me for an hour, and I said I could not imagine a better person to celebrate $1 trillion day with, and I think it's so cool that now we have this recording for all of posterity to say, hey, what did you do?
We were there on the night. That's
we were
right.
There drinking orange wine and having a good old time talking about the bright future. And look, the Star Spangled Banner just ended. We haven't even started the game. We're so early. We're just getting warmed up.
We are. I've had a lot of people that have told me, like friends, just saying, "Oh, I can't buy it. I'm so late to the game." And I'm thinking, we are so early right now that even at 50, what is it at? Like 56 or 57,000 or whatever. We're so early.
And I'll give people the same advice I gave. I was on CNBC about 1.5 years ago, and while I was on the show, it crashed from like 10,000 to 8. And Melissa Lee says, so what should we do? It's crashing. I said, buy it. And they're like, what? I'm like, buy it. I'm like, buy it? I'm like, yeah, buy it today, buy it tomorrow, buy it the next day, and buy a little bit every day. And it was so, and it's great because I go back and I look at it and I'm like, that was good advice then. It's good advice now. Don't buy it all at once. Buy some every day or every week or every month, and pick a number that you want to have, whether it's 1%, 3%, 5%, 10%. The younger you are, the bigger the percentage. Divide it by 52 and buy some every week. And just price is a liar. The price does not matter. What matters is ownership of the network. This is the greatest network in the history of mankind. You want to own a piece of this network, and you want to own it forever. And then you will build on top of it all the other services. Again, I'm gonna let you go watch WandaVision.
Yeah, no, I'm with you, Mark. I mean, it's insane. to think about what's about to take place on a global level. I mean, it's for the history book. So anyway, great chatting with you, and thanks for always making time anytime I reach out to you. So
always.
Yeah, always a pleasure.
Doing this, and thanks for having me. And we should make this a every Friday event. No, I'm just kidding. All right.
All right. See ya.
Take care.